Welcome back to the weekly market analysis for the week ending August 23rd, 2024. And we're going to take a look at what is to come. What can we look for in the days and weeks ahead now that the Jackson Hole major news event, Powell prepared remarks, is behind us. But before we do, I want to remind you to hit the like button, subscribe to the channel if you're not. You can follow me on Twitter at Mr. J. Thomason, or check out my free weekly newsletter at befinanciallyfree.substack.com. So an interesting week of price actions, the 5 days chart. So what was really interesting to me was to see, as expected, I talked about this last week and I wrote it in my newsletter that I figured the market direction would be more to the upside, and it was all week. And then suddenly on Thursday we had a giant gap up, and then it sold off. It sold off real hard. And a lot of people, I think, were thrown by that. There's been a lot of discussion about the market has come up too far too fast from the lows. People still talking about the potential for Japan, for the yen to rock markets. A lot of people have been kind of calling for dead cat bounce. Nobody really thinks that we should be heading up. People are talking about seasonal volatility, and things like that. And so I think what was interesting was this sold off so hard it created actually an outside reversal on the S&P 500. You can see it right there. The candle gaps up, makes a higher high than the previous day's high, and closes below yesterday's low. So obviously that was a big thing that I think people saw and started to sell into that, thinking that maybe somebody knew something about what was going to happen at Jackson Hole, and you started to see a lot of fear. Is Powell going to be a little hawkish? Will he be less dovish than markets expect? And on and on and on. And so, of course, we gap up, and then Powell starts talking, and like within seconds of him even talking, when the markets knew that his tone was not going to be hawkish, markets took off. And then, of course, like classic, you got to have the post press conference sell off, and we did. And then we jumped, and then we sold off again. And then about halfway through the trading session, markets decided, let's go back to the highs of the day. And so we closed pretty close to the highs of the day. That's a pretty bullish close, to be frank. And just another good example of why you have to trade a system, and why trying to pick turns and try to intraday day trade can be just, you have no idea. Like the moment the market started going up on Powell's remarks, how many people would have thought that the market would have sold off, came back up, sold off again, and then still ended up at the day's highs? I mean, most people probably would have, as soon as the market took off, probably bought up here, tried to chase it, and then it fell, so people got shaken out of their positions just in time for it to rise back up, and then they chased it again, and then it fell down, and then this time they just said we'll chase it down lower, and then so again, like trading a system is a much better way, to trade the markets, and trading less, and having a much bigger time horizon than a few hours or a few minutes. Because one thing I want to point out, this has happened a couple of times this year already, and that is the persistence of, I've been posting on Twitter. It's better if I go to the NASDAQ for just a minute. So this has happened twice now in 2024. On Friday, April 19th, somewhere around that time, I posted on Twitter saying, when the NASDAQ RSI is at this level, a long trade is like a 75% hit rate. And that's just day after gains. If you go out further than that, the hit rate is even higher. So whether you're talking about next day gains, next week gains, next month gains, 3 months from now gains, they're almost always positive. It's high percentage. So what happens as soon as the RSI on the NASDAQ, like on that day, the RSI for the Qs hit, under 30, closed there. Okay, take the long trade. Look what happens. Boom. All right, so we sell off, and what happens? the Nasdaq didn't quite get to 30, but it's for all intents and purposes, when you round it, it's rounded to 30. Take the long trade. Look what happens. Boom. Right. So that has been a reliable signal twice this year, because the Nasdaq RSI has only hit that around that level twice this year. In both cases, it's been a hit. So, trading a longer time horizon is a lot better. Trading system is a lot better, because if you had bought that, like when everyone was freaking out, if you had bought that, you're up 10% on the Qs. So, trading systematic is always going to be better, because otherwise you just get whipsawed around if you don't trade if you don't trade with a system, if you don't trade without bias and with clear signals. So, the equity markets look like they're on pretty strong footing. To me, the close today, closing near the highs, not at the highs, near the highs, is pretty bullish. Although one thing I will be watching is I want to see if markets can close above yesterday's high, because I usually do look out for outside reversals. And what's interesting to me is the outside reversal yesterday. The high was right almost to the tick at the same spot that the July 11th outside reversal took place. And of course, we did end up going higher and closing higher for one day. But I'm going to watch this level. I want to see if going into next week, if price gets above, closes above, and just keeps rocking to all-time highs. And it's funny because the markets were down essentially almost 10%, and nobody thought that we would have recovered, almost to the all-time highs it's been less than a month. We could hit, if we get up to new all-time highs by the end of the week, then we will have made a multi-month low and an all-time high, in the same 30 days, which is in the same 22 trading sessions, which is pretty crazy to think about. So anyway, equity markets look pretty strong here. Again, with respect to the fact that I want to see what happens, how price behaves at this particular level. One of the things I wanted to highlight too, the dollar is closing at the yearly low. The last time that the dollar closed at this level was back in 2023 in July, right ahead of the the counter trend rally, which culminated in the October and November lows. So I think that that's really interesting. I think at this point, like the dollar bears are going to be coming out of the woodwork. I haven't been able to look at the futures currency positioning, which again is just one thing to look at. It's not everything, but I do think it'll be important to look at. But I'm sure everyone and their mom is uber dollar bearish right now, especially when you consider the macro backdrop with the Fed is about to start cutting rates. They're guiding to rate cuts. And so I think that's interesting. One thing I do want to point out, though, for everyone who's saying, "Oh, cutting rates is going to be dollar bearish," I do want to point out that when the Fed first started cutting interest rates in late 2019, ahead of the COVID crash, the dollar did fall a bit, but it was essentially sideways. And then when the markets crashed in the COVID crash, the dollar fell precipitously, but then also rose precipitously and ended up higher before, of course, the dollar, before it ended up, giving up all those gains and going into that bear market. So, you always want to be careful. I've talked about this before on this channel. You always want to be careful about assuming that just because A is happening, B must always happen. Because if there's one thing that market history tells you, it's that surprises happen all the time. So, again, you want to trade probabilities. You don't want to trade assumptions, or you don't want to trade A plus B because those things don't always work that way. So, but I did want to call out that you could say when the dollar is going down, global liquidity is going up, and so you definitely typically that's pretty supportive of markets. So I wanted to point that out. I also wanted to point out the 10-year yield is still it's being sold down. It's let's see, it is also at the yearly low. We closed at this level back the end of December of last year. We closed at that level in August on, again, that what was going on with the yen and all the flight to safety and all that kind of stuff. So again, pretty interesting setup because at the bottom of this range, if the yield and if the dollar weakens substantially further, it has the potential to be bullish for risk assets. Although again, it doesn't necessarily have to be, but that would be that would be the way that I would lean on that. I wanted to point out Bitcoin. Bitcoin is having itself a fantastic day today, up over 7% on the day. And what's interesting about that is you actually can see on the 5-minute chart, you can see the Powell spike, the sell-off, and then it just careened to the upside and hasn't really looked back ever since. So Bitcoiners still waiting for this thing to get back up and make a new all-time high. It's definitely in a better position than it was, just a few weeks ago. But still remains to be seen kind of the path forward. I still say Bitcoin's in the window. And for those of you who don't know, the window is the space and time in prior cycles that it took Bitcoin to go from its pre-halving high to making a low and then making a new all-time high. It happens usually in this window. So we still have until the middle of September, so not a ton of time left. And it's not to say that just because the window gets violated means that that Bitcoin won't make a new all-time high. It could be different, and that's perfectly fine. You have to be okay with that. The other thing I wanted to look at was gold, and in gold, it's actually really interesting because I do have the COT data pulled up. I have not logged it and put it into my charts, but the COT data shows that the longs, the speculative longs, have just exploded to the upside here. And that makes sense because you've seen, as of Tuesday, when the commitment of traders is solidified, like when all the trades are in as of that day, gold was at its all-time high. And then what's been interesting is that on consecutive days of where there was dovish news, dovish reporting, gold was getting sold. And I think that that's probably because, today gold was up almost $30, over 1%. So, some people would say, hey, what are you talking about? Gold is doing fine. And I'm not saying that it's not, but I will say that at this point, the cuts are already coming. Everybody knows that. There's no advantage to knowing that rate cuts are coming. So I feel like all of this speculation that the first rate cut is going to be uber bullish for gold, and it's like, who doesn't know that? So to me, the issue is how is that not already priced in? And to me, the concern, if you're a gold holder or a gold trader, is to assume that, because the cut is coming, that gold is about to go even higher. It could. I'm not saying it won't. But the risk to reward isn't very good here because the longs are, it's as long as they've been in a long time, and, price hasn't been able to get up higher on dovish news. Yesterday the jobless claims were higher. The labor market revisions, showed that the jobs were overcounted for a year, and on all of that, you're telling me gold couldn't go up on that. So that's why I'm saying that I feel like we're at a point where gold. I'm not saying gold's peaked forever or anything like that, but the risk to reward for being long gold is not super good here. So, and again, don't come at me. Obviously, gold can still go up. It's just a probabilities and risk to reward thing. So, I wanted to mention that, and then I thought I would take a look at crude oil because crude oil is disappointing everybody these days. I feel like, well, not me because I'm not trading crude oil right now. a lot of people, if you follow me on Twitter, I got really loud about crude oil peaking over here, and crude oil peaking over here, and um, you know, in both of those cases, it actually worked out really well. Um, and I'm not going to be shy about that. But I've been pretty quiet ever since over here. I have not really been talking about crude oil because I haven't had any edge or any direction really in it. Other than that, I continue to see, the price action's different, but I continue to see the same story that I was seeing back here, which is, supply shortage. Like, people are trying to say like, oh, the people are talking about how like, oh, Brent crude is positioned speculatively in such a way where everyone's bearish, and it's like, okay, well, but the WTI is bullish. Like, people are speculatively long. So, when those things cancel each other out, there's not really an edge there, but people are going to try to call that stuff out. But crude oil had a good day today, but, that doesn't mean that it's going to, just rocket to the upside. What I will say is you did get a pretty clean RSI and MACD divergence. It wouldn't surprise me one bit to see crude oil touch 80 again over the next couple of weeks. The question will be the speed at which that happens. The other thing I was going to say is, like, on all of the news about, where there was production, like production was higher, which should have been bullish, and then the drawdown in the EIA inventory reports, the drawdowns were bullish also for the price of oil, and oil still fell. That's just. I feel like I'm gonna say something that I've said in previous videos in the past. Like, right now, it feels like the markets are saying lots of different things. Like, equities are saying everything's fine, soft landing is assured. Bonds are saying recession potentially coming soon. Gold saying monetary debasement and potential emergency coming. Crude oil is saying it's acting like potentially like super growth slowdown recession, and it's just a lot of things that don't make any sense. And then here you have the VIX at 1585. So the markets are interesting. Here my suspicion is, I was talking about this on a Twitter Spaces recently with someone, that I think that what's happening is we are set up for a melt up going into, in my opinion, going into October, because I think right now people think that the seasonality says, oh, the market has to be weak going into September. I actually think it's going to be strong. I could be totally wrong about this, but I think last week of August and into September will be strong. And I think what it's going to do is suck everybody in, because now what I'm watching is the breadth indicators here. I want to see these things get up to the 90 level here, get up to the highs on the stocks above the 200-day moving average. I want to see that happen, because then that's really where you're gonna see that sort of euphoric stocks are never gonna go down. Equities are unstoppable. The positioning will probably at that point be more reflective of an overpositioned market. One of the things that has been interesting to me, though, is to note that high beta has not outperformed. It's outperformed. Don't get me wrong. It's outperformed, but it's not performing the way that it has in the past when we've had these big move ups. So, like, if you look at last in November, late October, early November of 2023, we got the high beta, low beta ratio to like just rocket to the upside by December, and it's come up, but it hasn't done what I thought it might have done on that recovery. And to me, I'm still slightly concerned that this is still that this is still at this level. I want to see high beta, low beta get out of bearish tide before I feel super good. On the flip side, I mean, junk to treasuries is making like new yearly highs. So that's something positive. What else was I going to look at? I can't actually remember. But anyway, that's kind of where the market's at right now. I mean, what macro catalysts are there between now and September's Fed meeting? We've got a jobs report coming in about 2 weeks, I believe. We have another CPI that's coming. Next week we get the core PCE or the PCE readings. So that's going to be a big thing. Obviously, because of the CPI and PPI, my suspicion is those are going to be supportive of and dovish, supportive of dovish Fed policy. So I don't really think that there's a lot to be surprised about there. Right now, I mean, my sense is that markets at least for the next few weeks, are all clear, and then we'll kind of see what happens as we get into September towards Jackson Hole or towards the next Fed meeting. I think the one thing that could throw a wrench is if we continue to see labor market weakness. I actually think that if the jobs are if the unemployment rate goes up again, then I think that markets may interpret that in a negative way. Anyway, that remains to be seen. But at least for now, there's not a lot that isn't known by markets. And so we are going into this last week of August. It's one of the lowest. It's not the lowest, but it's among the lowest volume weeks of the year. It wouldn't surprise me at all to see markets just kind of grind up all week on low volume next week. So that's kind of what I expect next week. And then over the near term, again, I think there's not a whole lot that could really cause a lot of market downside unless we get like a big time surprise drop in jobs, or if we get something deflationary from CPI or PCE, or potentially if somehow inflation surprises significantly to the upside. But I think the bar is pretty high for that kind of thing. So again, my sense is that the market is likely to be on at least somewhat solid footing. One more thing is next week we have NVIDIA earnings, and so if we just take a look at NVIDIA for a second, NVIDIA did break out from its from this downtrend, and it's retesting that trend line. So we'll see what happens. It's still bullish tide. What'll be interesting to see is, NVIDIA had an outside reversal yesterday too. So that'll be interesting to look at, because the last couple of times NVIDIA had an outside reversal day, it wasn't good. So back in June, outside reversal, sold. July, outside reversal, sold. August, outside reversal, sold. I guess the only one that didn't turn into like a bigger sell-off was the August 7th outside reversal. So that'll be interesting to watch. We do have NVIDIA earnings on, Wednesday next week. That would be the 28th. So that'll go a long way as well in dictating market direction. So I'll leave it there. Thank you for tuning in. I hope that you guys have a great weekend. I'll see you guys next time.